Something just happened that is huge, potentially, for Tesla stock investors. This is actually some very big news. I don't know exactly what this leads into, but there's a huge rumor starting to speculate for Tesla that Tesla could be offering 0% financing soon because they just made an adjustment to their strategy of selling Teslas. Again, there's a lot we don't know. I will break this down for you guys, what it sounds like, again, what the rumors are, and what Elon Musk just said. He basically said Tesla's current operating strategy of reducing inventory pricing is inefficient, and it's really not the best way to do things. Lots of talk out there. We'll break it down in the second half of this video. We also have Fed Jerome Powell that came out and made some very different statements today than what he has said recently. Really, over the last 9 months, he's been hammering home. Inflation is falling. We're making progress. And he just basically said today, inflation is no longer falling, and we're no longer making progress on inflation, and we're going to stay higher for longer. That did cause some volatility in markets today, and I don't think that is over. So we'll go over that, as well as the earnings coming out tomorrow morning that will be important for our markets and really throughout the rest of this week, and why I think we could see some more downside for broader markets. So before we get into all of that key information, if you don't care about the Fed, you don't care about earnings, you don't care what happens in the markets, just skip to the second half of this video. And we're going to go over Tesla's options, all of these rumors that are starting to speculate, and what Elon Musk just said. Let's go ahead and jump into it. Hit the like button, subscribe to the channel, and if you guys want to come trade with us live in real time, check out that link down below in the description of this video. Oh, and I will also share why I believe Tesla stock is still set up for a rally after earnings. As you can see, this is the NASDAQ up here on screen. When Fed Jerome Powell made this statement, within the next 2 minutes, the NASDAQ fell about 0.5%. You kind of bounced up, you went down, you bounce way up again. The algos went crazy for no reason. This is what you call a fake rally. You want to be very careful with these fake rallies because what happens? Well, you came right back down, you kind of rallied again, and you came right back down to close the day up 4 cents on the NASDAQ, virtually unchanged. But I do think this situation with the Fed and what Jerome Powell said today is going to take some time to work into markets. And it could mean tomorrow could be quite red. Not just for reasons of what Fed Jerome Powell said, but as well as earnings. And I will go over my expectations. So Powell says recent data shows lack of further progress on inflation. Fed Jerome Powell for the last 9 months or so has said, we're making progress on inflation. We expected this bump in the road. But now you've seen January, February, and March come in hot. Maybe Jerome Powell knows something that we don't, but he said today, we're no longer seeing progress on inflation. And this is, well, not great. Maybe the markets already knew something that we did not, given the rise in the 10-year Treasury yield has been aggressive recently. The 10-year Treasury yield has risen 3 basis points today. At one point, you were up 6 basis points. Yesterday, you rose another 13 basis points. Overall, you're up almost 1% on your yield for the 10-year Treasury since the start of 2024. This has meant very minimal downside for the broader markets, but at some point, 10-year Treasury yields over 4.5%, creeping closer to 5%, will start to have an impact. Now, they will likely start to have an impact more if earnings come in bad. I will tell you right now, let's point out the obvious. Tesla, interest rate sensitive stocks, small caps, they've been obliterated. It's been a rough year for small cap, mid cap, or interest rate sensitive names. Look at Tesla. It's been a rough year for Tesla and other stocks. But the headline markets have, they're sitting at almost all-time highs. And eventually this will affect them as well. But what Fed Jerome Powell just said, I want to highlight this, is the first step to pull in a real switcheroo. To go from, yeah, maybe we're going to, cut rates a couple times in 2024 to we're not going to cut rates at all in 2024. 2, we're going to maybe raise rates again. Yes, that's the situation that we could be dealt with if the next month or 2 of CPI reports continues to show accelerating inflation. Again, the Fed might say, we're just wrong. Like, everyone's wrong. Maybe the neutral rate is a lot higher than we think. And yeah, the Fed is going to risk doing a lot of damage to the economy. But if inflation's not coming down, that could be problematic. Now, if we do have a black swan event, if we have something negative happen, like this Middle East situation, obviously that could change the Fed's stance, and I would expect it does. Now, part of the reason why you did see a market that was kind of muted today, yes, there was a lot of volatility up and down, but you really didn't get that big, sell-off like we have seen recently. There just wasn't a lot of new information coming out of Israel. About 3 hours ago, the War Cabinet ended their meeting in Israel, and there has been no statements, no announcements, nothing about a retaliation against Iran. So the lack of news was definitely seen as positive by the markets today. Now, switching back to Fed Jerome Powell, he made some other comments as well, like this one. The labor market is moving into better balance, even amidst ongoing strength. Some of the same old, but then he follows up with 12-month core PC inflation was little change in March, according to estimates, and if higher inflation persists, the Fed can maintain current rate as long as needed. So basically saying you're not getting cuts anytime soon, which the markets have already known this, but the Fed saying this is just a little different, because that's not what the Fed has been saying. The Fed has been more bullish than not. Last Fed meeting actually said the Fed went full bull, like full tilt to the bull side. You've gotten two inflation reports since, and they're starting to change their stance. Nick Timiraos, widely seen as the Fed's mouthpiece and a well-interpreter of the Fed, he says preemptive or soft landing rate cuts are off the table for now. Firmer Q1 inflation reset the confidence clock. So the Fed would have to see 3 more months potentially of inflation reports coming in good, or maybe more than that, to be confident to cut rates again. Now, unfortunately, the Fed, you'd think these guys are intelligent, but it almost makes you wonder, because there's nothing the Fed can do about inflation at this point. The Fed holding rates where they are, cutting rates, raising rates, it'll do nothing for inflation, because it's in housing and there's a lot of immigration. Simple supply and demand would tell you low supply, high demand would mean prices are not going to fall in housing, which is the largest segment of inflation today. At the same time, you're not going to get people that, stop going to get a haircut as often, or go to concerts, or go watch movies, or whatever it is, services, until they start losing their jobs. And the Fed's obviously not having that probably desired effect on the economy as well. So there's really nothing the Fed can do here. I think the Fed wants to be a little bit more cautious, obviously not cut rates too soon, but it's really nothing the Fed can do. And again, the reason why stocks like a Tesla, small cap, interest rate sensitive names have done so poorly is because now you're only pricing in 1 cut. Well, no, you're back to 2, but it's very close. You're barely pricing in 2 cuts. Earlier in the day today, you were only pricing in 1 cut in 2024, and you started off this year pricing in 6 rate cuts. Now, we'll probably get more than 1. I'm sure the Fed will have a reason to cut rates, a bad jobs report, bad earnings, whatever it is, maybe a stock market crash or decline during an election year. That can definitely be a catalyst as well to get the Fed to start cutting rates. But that's why Tesla has performed poorly in your other areas of the markets in 2024. Well, maybe I should rephrase that. That's part of why Tesla has performed poorly in 2024, because you're not expecting these rate cuts from the Fed literally anytime soon. September is when you're expecting the first cut from the Fed at 42 point, September is 45.9% odds. And then you're expecting a pause in November. And then you are barely pricing in another cut in December. So you're pricing in one cut in September, one cut in December. Barely. 0.3% difference between one and two cuts. So you could almost say you're only pricing in one cut and just go with that. So that's not great. The markets panic, and I mean full on panic, if you get another month or two of hot inflation reports and then the markets go, oh crap, is the Fed going to actually raise rates again? That's where it becomes problematic. If the Fed changes from, when are we going to cut rates to maybe we need to raise rates, that's when you could see a 20, 30, 40% decline from the prices that we are at. Now, I do believe in the near term we are set up for some pain, and I'll tell you exactly why that is. You have earnings coming out. There are earnings that are going to be released tomorrow morning that will be very important, like ASML. ASML, I have pointed this out before, and I'll go ahead and throw it up here on the chart again. They've done very, very well. High-flying AI stock. I mean, the stock's $976 per share. November, October lows, it was $550 or so. Stock's done very well. High-flying AI stock. Go figure, right? Not a big shocker. It's done well. Okay, fine. But with the stock sitting close to all-time highs, expectations are super, super high. That sets you up probably for, if I were to assign statistics on this, an 80% chance of a fall coming tomorrow, maybe more than that, because expectations are so high. Even if they come in with good earnings, good guidance, it's not going to be enough to send the stock up in any kind of meaningful way. If they come in with bad numbers, that's going to sour the whole mood for all of your AI stocks, for NVIDIA, for SMCI, for Intel, for AMD, for TSM, everyone, right? That's why ASML will be very important coming tomorrow morning. And I'm expecting this entire earnings season is going to be okay, but it's going to be a disappointment compared to where expectations are and where these stock prices are. Same is true for TSMC that reports earnings tomorrow, Thursday morning. That one's set up for disappointment as well. Same with Netflix. I mean, both of these stocks are up like 50% or more. Netflix is a double up from its October, November lows. You're just not set up in an optimal position. And that's why I think you could see more downside for a stock like Tesla before Tesla does report earnings. Now, Tesla stock sitting right here at about $157 per share. You did stay above this trend line, which is really what I wanted to see on a technical basis. It's funny how the technicals just work so well on Tesla. I haven't changed anything. I haven't moved anything. And look at that. You fell under the trend line quite a bit, down to $153.75, and you bounced right back above the trend line. That was a $3 bounce or so, a little bit more than that, from the low of the day today. You gotta think the technicals are making some kind of difference here for Tesla on a day-by-day basis. Now, I'll be honest, technicals don't look great. You're under 160. That's not good. If you break under this trend line, then you're pretty much guaranteed going to fall into the high 140s at the bare minimum. And then from there, you really get into no man's land. I mean, at that point, you could end up falling into the 130s again. But I really only think that happens unless we have a disaster earnings on April 23rd, unless we have, some bad news from now until then, or company earnings broadly for the markets just come in really bad. I'm not expecting Tesla stock's going to fall into the 130s. Is it possible? Of course. But at that point, you probably have a lot more overall market weakness to also contend with. Jim Fan here on X says humanoid robots will exceed the supply of iPhones in the next decade. He said gradually and then suddenly. Elon Musk comments and says, yeah. And this post initially that was posted that Jim Fan reposted that Elon commented to Says number 2, labor will be near free. We will have 1 billion bipedal and other robots, freeing humans from the servitude of undesirable jobs. If Tesla can capture a small fraction of that market, which it could likely be a market leader, 10% plus market share, 20% market share. I mean, buying Tesla stock at these prices today is an obvious no-brainer. I think it's an obvious no-brainer for basically everyone watching this video, but just in case you were unaware, that would be, yeah, that would be fantastic. In more simpler terms, you would be rich as hell. I would also say this is some good news. Don't have much clarity on this yet, but it should be good news. Elon Musk responds to Sawyer Merritt here that says, Tesla has removed all inventory discounts for all vehicle models in the US, excluding demo cars. This is the first time since 2022 that Tesla's had no inventory discounts in the US for Model 3s, Model Ys, Model S, and Model X. Some recent discounts had been as big as 10% off, so this is a big strategy change. Elon Musk says we are simplifying and streamlining the whole Tesla sales and delivery system. It has become complex and inefficient. James Cat writes on X as well about 1 hour ago, by stopping the price cuts, turning to price increases, removing inventory discounts, it appears that Elon has finally realized that Tesla's price cutting strategy has hit the point of diminishing returns where it just makes no financial sense anymore. This was a failed strategy from the beginning, as I explained in detail in this thread a year ago. So judging off of all of this, there is a really big shakeup happening at Tesla right now, and this may include their entire business model. We just don't know, but the way that Elon is speaking, I mean, that's exciting. It's gotta be better. It's gotta be better. Like, anything's better than what we've dealt with in 2024 in terms of Tesla stock. So I think some change here is gonna be good. And again, this is further validation that I think markets are way too bearish on Tesla heading into Tesla's earnings. Now, let's be clear. Tesla reducing 10% of their workforce. There's going to be a lot of severance costs associated with that. It's not going to be a cheap or free process to get rid of that many people. There is probably going to be some form of cost in regards to restructuring. Tesla's earnings are not going to be that great. The only thing that really matters right now is where are margins going and where is overall profitability going. Obviously, growth matters as well. But if Tesla paints this picture that they're going to become more profitable in future quarters, Tesla's stock will start to do better. And that's really the bottom line. Now, there is also talk that Tesla is going to offer 0% financing. That, my friends, would be fantastic. I think even, let's not even go into how that works. I don't think that matters all too much right now, but it does appeal to people. People these days, they don't want a high interest rate. And let's say a Tesla is at whatever, 6.5% interest, or a Toyota RAV4 or, other EV or even internal combustion engine car, you can get a 0% financing and that payment's cheaper. Even though you want a Tesla, it may just be too unaffordable for a lot of people. I think if Tesla did do 0% financing, that would be huge for Tesla's business. And I think that would do a lot more good than cutting prices. So seeing Tesla getting completely rid of your existing inventory discounts, that's fantastic. That is good news. Now, Tesla's stock didn't seem like it took it as good news. I don't even think the algorithms picked up on it, considering the stock was down about 3% today. That news actually came out at about 3 p.m. today, and you really didn't see much of a rally. You did see a slight uptick or uptrend toward the end of the day, but I don't think the algorithms actually picked up on it, so maybe that could be an upside, I guess, surprise, quote unquote surprise. You guys know about it. Surprise to the markets. coming tomorrow. Here on the day today, you had 1,228 different trades from hedge funds and institutions, totaling $1.32 billion with a positive order value of 39%. So like I said, although I am quite negative right now on the markets, I think expectations are way too high for this upcoming earnings season for especially your big tech names. Now, a stock that's gotten beaten down and beat up like Tesla, obviously expectations are low. I think you're set up for an upside surprise, unless things are just even worse than people expect, which I think that's hard to kind of do at this point. But your big tech names, ASML, TSM, Netflix, Google, Amazon, your typical stocks, minus Apple. Maybe Apple could fall some more, but Apple's fallen a lot recently. Put in there Microsoft, Meta, right? You know these stocks, Nvidia, SMCI, Intel, Dell. It's a lot harder to make a bull case for those stocks right now. I think for Tesla, it's going to be influenced by the broader markets. But if Tesla does give us something to look forward to, if this, conference call is not a complete disaster like the last four, Tesla stock should do well. If we walk away having an understanding of what Tesla's doing, why they're doing it, where they're going to be quarters down the line, Tesla stock will likely go higher. And that is my expectation still on Tesla's earnings. And again, like I've said before, the lower Tesla goes, the more Tesla falls heading into earnings, the bigger potential upside surprise that you can see. And let's be honest, Tesla at $156 per share, that's like giving away free money for long-term investors, in my personal opinion. But hey, what do I know? Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.